Hey guys, this is Junior Trader, and in this video we are taking a look at SMCI stock. And so let's do the price action analysis and why I am saying that this particular area that I'll talk about in this video, why this particular area is an area of caution. You should be cautious in this area. And why so? Well, that's what we'll discuss in this video, and we'll talk about what can we be expecting from SMCI going in forward and how to trade this thing. But before that, I also want to let you know that none of this is any financial advice and it's only for education purposes. Please do your own due diligence on whatever you want to do. I'm just sharing here my opinion, nothing more than that. All right, so SMCI, a little bit of background here, first of all, guys. So this is where, when I talked about it, when back here we were in these two red candles, I talked about if we break below 762, it's a flush. If we break out and above of $804, it's a structure change back again to the upside. And then SMCI gave us all that move, and I have been saying since then that all these pullbacks are just a buy as long as we are above the blue box, and this can give us the move all the way to $972. We went higher above that as well and then sold off. Why I was only confident until 972? Well, going up and above, it's great as well, right? But the reason I was more cautious and only gave the level 972 in the discussion, and if something goes up, yeah, keep partial position running, right? But due to the reason that we had this previous sell-off here, all right, and these two supply zones were still enacted. I mean, in other words, the sphere of influence was still open and there was no other price action reacted already in this area. So that's why this area of influence was still valid and we got a rejection over there this time. Then we came lower and I said that this structure is not going to become bearish yet. Any pullback on this is just a buy. We got that next green candle as well. However, right after that, if we wanted to stay in the structure bullish, we had to go up and above from here, thus keeping this higher pivot. However, next day SMCI lost the level, and that's where this was intraday already change of structure at 883, and we got a downside play. Now it all comes down to this blue box down here because that's where 20 and 50 days moving averages. So actually, blue box in itself had its validity until back then here. Now it's about 20 and 50 days moving average. But the reason I'm saying an area of caution, and what is that area? And that area is, guys, pretty much this one right over here. Why is this an area of caution? And let me see if I can write it down inside it. Area of caution. And the reason it's an area of caution is because technically we are above 20 and 50 days moving average, but even if we get until above this level of 882, that will not fully, because this area of caution you can still trade. If we get above 855, you can still trade intraday long, but only until 882, because until and unless we are not taking out and not going above from where we are, that is 882, structure is not going to get fully bullish because it hasn't still regained this previous pivot. All right. So that's something you need to be careful of if you want to trade it long again. So right now, if any long play comes, that is until from 855 only until 882 intraday long. Otherwise, that's definitely again an area where this thing, if it goes up, then this thing 882 can still reject it because on the intraday we still have a lower pivot. So you get my point, right? We are already looking weak at this, already one of the significant levels marked by my indicator. And if you need access to my tools guys that marks these levels automatically, that you need to be focusing on for the price action, links to my tools are in the description below. Now 855 is where if we are rejecting over there today, and if we lose 200 hours moving average together with that 20 and 50, it's already looking weak. So that would be then a continuation to the downside. You can still trade right now intraday long or down, but with these levels. Now, that's the bear case if we continue to lose 20 and 50 days moving average. If we continue to hold 20 and 50 days moving average, and at least let's say we go sideways here but stay above 20 and 50 days moving average, after a couple of days, even after getting above 855, it opens up the good likelihood of then breaking above 882. So you got the difference, right? There are two things I'm saying here. One is, if from here, let's say the next day, if it just goes up, just one next day candle, but fails to go above 882, then we come down and then we find support at 20 and 50 days moving average again, and then go above 855 again, then most likely we're gonna take out then 882 resistance, this previous pivot, and structure will start to change back again full on to the upside. So for the first few candles, you have to be cautious and careful here, at least for tomorrow's and today's candle. This zone area of caution is not going to make it bullish right away. Give it a day or two before it re-enters here. If it can't re-enter here below 20 and 50 days moving average, it's a game over. And if we can get up again, then there's a possibility of going it up again long. But area of caution is where it's a little bit going to stay undecisive. Trade only intraday, up or down, long or short at these levels. You have to see the price action at these levels. And then if we can get fully above 882, that will continue the structure back again to the upside. More as structure would develop, I'll talk about it, but that's all for today on SMCI. All right, cool. I did a video on NVIDIA already this morning. Check that out on my channel, guys, if you are interested. Tesla is also looking good. I'll talk about that soon enough. And yeah, and guys, I'll see you in my next video. NVIDIA's another video will be coming out later, but just to show you what NVIDIA is doing still, just to show you that it is recapturing that blue box that I talked about. If it can do it today, bulls still have chance. So I'll talk more about it later, actually, when the market has closed. So yeah, this is something you gotta be watching. It's still underneath of 200 hours moving average, but interesting. Check out my morning video if you want to know more about it. But yeah, I will be talking about it later in the evening as well. But anyways, all right, guys, well, that's it for this video. If you found it helpful, valuable, hit the like, subscribe, and I'll see you in my next videos. Take care. Bye.